Welcome to Walker's Market Weekly. I'm RK Walker, coming to you from my home while the New York Stock Exchange floor is temporarily closed, bringing you a review of this week's stock market. On Monday, extreme volatility continued, with the Federal Reserve announcing that they will buy unlimited amounts of Treasury bonds and mortgage-backed securities to help keep markets liquid, and they also took steps to ensure corporations, state and local governments continue to have access to credit. Markets rose on the news. However, Congress continued to haggle over details of a massive stimulus package, and when they could not gain consensus, markets sold off sharply. The Dow Industrials ended the day down 582 points, or 3.1%. However, the tech sector held up comparatively well, with the Nasdaq Composite only down 0.3%. 10-year Treasuries declined 10 basis points to 0.75%. West Texas Intermediate crude rose 3.9% to $23.51 a barrel, and gold rose 3.7% to almost $1,554 an ounce. On Tuesday, the PMI composite flash for March sank 9.1 points to 40.5, and new home sales for February rose 1,000 to an annualized 765,000 units. House Speaker Nancy Pelosi said there is real optimism in Congress over a stimulus deal being reached in a very short time. The Dow Industrials closed 2,112 points higher, more than 11%, its biggest one-day percentage gain since 1933 and its largest point gain ever. 10-year Treasuries increased 6 basis points to 0.85%. West Texas Intermediate crude gained 2.3% to $23.89 a barrel, and gold increased 4.6% to $1,625 an ounce. On Wednesday, durable goods orders for February rose 1.2%, and the EIA petroleum status report for the week ending March 20th saw crude oil inventories rise 1.6 million barrels. For the first time since February 12th, markets posted back-to-back gains, with the Dow Industrials closing up 495 points. However, most of the day, markets were up considerably higher and then lost momentum when Senator Bernie Sanders threatened to hold up approval of the congressional stimulus package unless unemployment assistance was strengthened. Also lightening the mood was former Fed Reserve Chairman Ben Bernanke's interview, in which he said the U.S. economy will experience a quick rebound after a very sharp recession. He likened the current situation to a major snowstorm rather than the Great Depression. Late in the evening, the Senate unanimously passed a $2 trillion coronavirus stimulus package and passed it along to the House for a vote. The package includes checks to be sent directly to qualifying Americans. On Thursday, the second estimate of fourth quarter GDP came in unchanged at 2.1%, and jobless claims for the week ending March 21st were a stunning 3,283,000, a record high, beating the previous record of 695,000 in October of 1982. In a rare television interview, Federal Reserve Chairman Jerome Powell said that he expected a substantial decline in second quarter economic activity and that the central bank will not run out of ammunition to fight the crisis. Interestingly, markets completely ignored the bad news and rallied strongly, with the Dow Industrials ending the day up 1,351 points, or 6.4%. The S&P 500 rose 6.2%, and the Nasdaq Composite advanced 5.6%. For the Dow, this was its biggest three-day surge since 1931. The yield on 10-year Treasuries fell 5 basis points to 0.82%. West Texas Intermediate crude fell 5.1% to $23.23 a barrel, and gold rose 1% to $1,632 an ounce. On Friday, personal income for February rose 0.6%, and consumer spending rose 0.2%, while the PCE price index rose 0.1%. Consumer sentiment for March fell 6.8 points to 89.1, its lowest level in over 3 years. At the open, markets dropped sharply, with the Dow Industrials falling more than 1,000 points, with Chevron, Boeing, and American Express suffering the steepest declines. This is Walker's Market Weekly. I'm RK Walker, and I'll see you again next week.